You know, I've been around markets long enough to see the same thing happen over and over again. It's funny, isn't it? Men call themselves smart. They say the market is different this time, but it never is. History repeats itself in the market because human nature never changes. Greed, fear, hope, ignorance, they were there yesterday. They're here today, and they'll still be here tomorrow. Have you ever seen a man who bought at the top suddenly turn calm when the price drops against him? No, he clutches his stock tighter, prays for a bounce, and rides it down. And when it finally recovers, he sells too soon because the sting of that pain is still fresh. Doesn't that sound familiar to you? Haven't you seen it on the charts? Haven't you felt it yourself? That's why I say, you don't trade stocks, you trade people. A chart is nothing but human emotion plotted in price and time. Those little bars and lines, they're footprints of the crowd. Every rally, every panic, every quiet spell is the same pattern repeating because the people behind it never change. And when you can read those footprints, when you can step back and see that a breakout today looks just like a breakout 10 years ago, you realize that history repeating isn't just an old saying, it's the only constant law in speculation. But here's the catch. Most folks look at a chart and think it's telling them the future. It's not. It's telling you the present, the truth of what people are doing right now. And the truth, when you study it long enough, points to what usually comes next, because the crowd doesn't change its habits. When a stock builds a base, then lifts off, the run looks just like it did in the bull markets of years past. And when a bubble bursts, it always leaves the same wreckage on the tape. So let me ask you, why would you fight against what the chart is telling you, if you know it's just human nature repeating? The real trouble is, the average trader doesn't believe history repeats. He thinks the situation is unique. He convinces himself that this time the stock will act differently, or this time the market can't fall because there's too much money on the sidelines. Haven't you heard those arguments? And yet, what happens? The same old story. The bull climbs, the crowd piles in, the weak hands get shaken out, and when the music stops, the same excuses are made for why they lost. Always the same? I used to sit in bucket shops as a boy and watch these men day after day. They'd buy because somebody whispered a tip. They'd sell because they got nervous. They'd blame bad luck when the market turned against them. And all I did was watch the tape, mark down prices, and look for the same old formations. I made my living because I believed history does repeat, while they kept believing it didn't. Do you see the difference? That's not brains, that's discipline. Anybody can learn that if they want to. The market's never wrong, but people are. Have you ever caught yourself arguing with a chart? You say, it's gone up too far, it can't go higher, but the tape keeps climbing. Or you say, it's already dropped too much, it has to rebound, and it keeps sinking lower. That's you arguing with history. That's you telling human nature it must change. But it won't. The law of supply and demand, the push and pull of fear and greed, it's the same now as it was in 1907 or 1929 or any other year you care to name. You want to build wealth. Then you learn to stop arguing and start listening. You trade with history, not against it. The funny part is, even when men see it, they still don't believe it. Take a look at your own record. How many times have you said to yourself, I knew it would break out, I saw the pattern, but I didn't act? That's you ignoring history. You recognized the play, but you didn't trust it. Why? Because you thought your feelings mattered more than the market's memory. The only way you ever build a fortune in this game is by aligning yourself with those repeating patterns and cutting off every trade that doesn't fit the law you've already seen 100 times before. Now don't misunderstand me. I'm not saying it's easy. If it were, everybody would be rich. The difficulty isn't in reading the tape, it's in controlling yourself. It's in killing that voice that says, maybe this time is different. That's the most expensive phrase on Wall Street. This time is different. It never is. Prices may move faster today. The volume may be bigger. The headlines may be louder, but the essence is the same. Think back to every great boom. Railroads, steel, oil, radios, .coms, electric cars. Crypto, it's always the same fever dressed in different clothes. Do you see the pattern? Doesn't that tell you that history is the only guide you really have? What makes a trader last isn't catching tips or gambling on hunches. It's learning the repeating cycle and respecting it. Breakouts work because demand overwhelms supply. Panics collapse because supply crushes demand. Between those two poles, the market writes the same story chapter after chapter. Your job is to recognize the chapter you're in and act accordingly. Tell me, why would you bet your money on a new story when the old one has been written the same way for 100 years? I've been ruined more than once in my career. You think I didn't know the rules back then? I knew them. But I didn't follow them. I thought I was smarter than the law of repetition, and the market punished me every time. It doesn't forgive arrogance, it doesn't bend to your will, and it doesn't care about your opinion. It only respects discipline. And discipline means standing aside when the pattern isn't clear and hitting hard when it is. Haven't you noticed how the biggest money comes not from constant action, but from waiting, from sitting tight when the market confirms what history has shown time and time again? Most traders don't fail because they can't read a chart. They fail because they can't read themselves. They get excited, they get scared, they get restless. They forget that the same emotional traps that caught men 50 years ago are still catching them today. That's the cruel joke of the market. You already know history repeats, but you keep behaving like it won't. Doesn't that sound a bit like insanity? And yet, every day the market opens, men walk right back into the same trap. That's why I say the hardest work in speculation is not in studying stocks, but in studying your own reactions. You learn to trust what the chart is whispering, not what your heart is shouting. You learn to sit out when the formation is vague, and you learn to strike without hesitation when the signal is clear. That's the way to survive. That's the way to prosper. The man who keeps his eyes on the tape and his emotions in check is the man who proves every day that history does repeat, and that he can profit by it. Now think about this for a second. What is wealth in trading? It's not one lucky score. It's not a quick killing. It's the steady compounding of right action repeated over and over. Just like the market repeats, your discipline must repeat. A breakout is only valuable if you treat every breakout the same way. A stop loss is only protection if you always obey it. One exception destroys the law. Do you see the parallel? The market's law is repetition, and your law must be repetition too. Isn't that the only way you build something that lasts? Wealth in the market is not built on luck, no matter what the crowd believes. It is not a lightning strike, a sudden miracle, or a single winning ticket. Wealth is built on repetition, on doing the right thing again and again until the small victories pile up into something greater than you imagined. The man who makes a killing on one bold gamble will almost always lose it just as quickly, because he mistakes chance for skill. Haven't you seen that before? A fellow catches one big move, he boasts, he struts, and before long he's wiped out because he thought he was smarter than the market. That's the nature of luck. It deceives you into thinking you can repeat it, when in truth it cannot be repeated at all. Now look at the disciplined trader. He doesn't boast of sudden fortune, because he knows wealth is not sudden. He builds brick by brick, trade by trade, following rules that don't change just because the market mood shifts. That's the man who understands that the market is a machine of repetition, and to profit from it, he must make his actions repeat just as consistently. Do you see how that works? The same law that governs the crowd governs you. The crowd repeats fear and greed, so the chart repeats its patterns. And you must repeat your discipline, so your account repeats its growth. Every fortune I ever made came not from one lucky strike, but from sitting tight on a sound position and obeying my own rules. The big money was not in the buying or the selling, but in the waiting. And waiting is nothing more than repeating patience each day, each week, until the cycle runs its course. Can you wait like that? Can you resist the urge to act just for the sake of acting? Most men cannot, and that's why most men never see true wealth. They take a profit too soon. They let a loss run too long. They violate their own rules. They break the chain of repetition, and in that single break, they undo months of sound work. Think of compounding. Every schoolboy knows the principle, yet few traders live it. Compounding is nothing more than repetition turned into mathematics. You grow a little, you protect it. You grow again, and you protect again. The power comes not from the size of one gain, but from the steady march of many gains added together. Wealth is a reflection of discipline, repeated so often that it becomes second nature. Haven't you noticed how the traders who last in this business don't seem to get excited? Their wins don't thrill them, their losses don't crush them. Why? Because they see each trade as one step in a repeating process, not as a final verdict on their fortune. The crowd hates repetition. They want excitement. They crave a new story, a fresh tip, a sudden windfall. That craving is why they lose. They abandon sound principles for the thrill of novelty. But the market, in its cold truth, doesn't pay the man who seeks excitement. It pays the man who respects the dull discipline of doing the right thing again and again. Do you understand what I mean when I say dull discipline? It's boring to stick to your stops every time. It's boring to wait for the same setup you've traded 100 times before. But that boredom is wealth. That boredom is freedom. And the thrill seeker who jumps for novelty will always pay for the disciplined man's patience. In my early days, I too was seduced by the idea of the quick killing. I thought if I could only catch the big swing, I'd be set for life. And I did catch them a few times. But I also gave it back, because I hadn't yet learned the deeper law. The law is not to catch one big move, but to catch many moves correctly, to repeat correct action so often that the result is inevitable. That is what builds true wealth. It is slow at first, like watching a sapling grow. But over the years, that repetition becomes a tree with roots deep enough to weather any storm. Every loss I ever took taught me the same lesson: stick to the rules without exception. The rules exist to be repeated, not to be bent. You might think one exception doesn't matter, but it always does. That one time you move your stop just a little lower because you hope the market will turn. That one time you take profits too soon because you want to lock it in that is the one time that erases months of disciplined gains. Haven't you felt that sting? Haven't you seen how hard it is to rebuild after one careless break in discipline? That is the cost of abandoning repetition. Wealth, like the market itself, is a creature of habit. The market repeats because men repeat, and your account grows because you repeat discipline. That is the mirror. If you are careless one day, you will pay for it. If you are consistent every day, the reward will come. The trouble is that human nature fights against consistency. We get bored, we get greedy, we get afraid. And so the trader's real battle is not with the market, but with himself. If he can win against his own impulses, then the repetition that builds wealth becomes as natural as breathing. Let me ask you, how many times have you taken a profit just because you wanted the relief of being right? How many times have you cut a winner short and then watched it run another 50 points without you? That's not discipline, that's impatience. And impatience is the enemy of repetition, because repetition demands that you treat every winning position the same way, letting it play out until the market itself says the run is over. Cutting it short breaks the pattern, and once you break the pattern, you break the wealth it was building. The great fortunes are never made by men who chase every move. They are made by men who identify the repeating setup, act only when it appears, and act the same way every time. If you change your method because you feel different today, you have already lost. The market doesn't care how you feel. The chart doesn't adjust itself to your mood. It repeats itself, cold and steady, because the crowd repeats its behavior. And you must answer with your own repetition, steady and cold, unmoved by feeling. Isn't that the real test of a trader? Most men can follow rules for a week, maybe a month. They get tired, they get restless, they crave something new. But wealth only comes to the man who repeats discipline for years, for decades. He may not look clever. He may not sound exciting. But his account tells the truth. You see, in speculation, it's not the brilliant who survive, it's the consistent. The one who can repeat without fail. And here is the final irony: when you master repetition, your wealth begins to look like luck to everyone else. They say he's always in the right place at the right time. He's lucky. They don't see the years of repeating the same study, the same patience, the same rules. They don't see the discipline behind the fortune. But you will know, if you live it. You will know that wealth was not built in one moment of brilliance, but in countless moments of repetition. Human nature drives the market, and human nature never changes. That is the first and last truth a trader must learn if he ever wants to last in this business. You can change the tickers on the board, you can invent new industries, you can fill the newspapers with new slogans, but underneath it all, the same two forces govern the crowd: fear and greed. Haven't you seen it yourself? A man buys a stock because he hopes it will rise, and when it does, he hopes for more. Another man sells because he fears it will drop, and when it does, he fears it will drop further. Hope and fear, greed and panic, they weave the same story over and over again. The tools change, the technology changes, but men don't, and because men don't change, the market doesn't change. I learned this lesson the hard way, sitting in bucket shops as a boy, marking down prices and watching how men acted around them. I saw fellows who had been beaten yesterday come back today with the same foolish hope. I saw them whispering tips, chasing the same mirages, and I saw them lose again. Didn't it ever strike you as odd that men could be whipped again and again by the same mistake and still come back for more? That's because human nature doesn't evolve in the short space of a lifetime. It repeats itself endlessly, and the market is the perfect stage where those repetitions play out in public. Think of a bull market. It always starts quietly. A few sharp eyes notice value, they accumulate in silence. Then prices creep higher, others take notice, and slowly greed begins to spread. At first, it's cautious greed. Then it's enthusiastic. Then it turns to frenzy, when even the Shushin boy is giving tips. Haven't you read about it in every era? Railroads in the 19th century, automobiles in the early 20th, dot-coms at the turn of the millennium, cryptocurrencies more recently. Always the same pattern. Always the same explosion of greed, followed by the same collapse when fear takes its turn on the stage. The details differ, but the psychology never does. A trader who forgets this truth will always be caught off guard. He'll say, this time is different, but it never is. It may look different on the surface, but beneath the surface, it's the same human nature. A new technology doesn't change how men feel about money. A new government doesn't change the pulse of fear and greed. Haven't you noticed how every panic looks like every other panic when you strip away the headlines? Crowds rushing for the exits, selling at any price, while a handful of disciplined men quietly accumulate, knowing that fear always overreaches just as greed does. The market is nothing more than human nature expressed in numbers. That's why charts work. That's why tape reading works. You're not looking at magic, you're looking at people's emotions recorded day by day. When you see a breakout, what are you really seeing? You're seeing greed outpacing fear. When you see a breakdown, what are you seeing? You're seeing fear crushing greed. Every tick is a vote of human emotion. And when you've watched enough ticks, you realize they've been voting the same way for 100 years. Most men fight this idea because they want to believe they're unique. They tell themselves they'll outsmart the market by being cleverer, faster, more informed. But cleverness has never beaten the law of human nature. Clever men get ruined just as surely as fools, because cleverness makes them think the law doesn't apply to them. Haven't you noticed how the brilliant economist loses money while the plodding old trader keeps making it? That's not because the trader is smarter, it's because he respects human nature and doesn't argue with it. Let me ask you something. When was the last time you held a losing stock and said to yourself, it'll come back? Isn't that just hope speaking? And when was the last time you sold a winner too soon because you were afraid it would vanish? Isn't that just fear speaking? These are the same impulses that ruled the markets a century ago, the same impulses that ruined men in 1907, 1929, 2000, and every year in between. Nothing has changed. Human nature drives it all. This is why I say the market is never wrong, but people are. The market only reflects what people are doing, what they're feeling. If the crowd is greedy, prices rise. If the crowd is scared, prices fall. Simple as that. It doesn't matter what you think should happen. It doesn't matter what your opinion is. The only thing that matters is what human nature is producing on the tape. And if you can train yourself to read it without bias, you can ride it instead of being crushed by it. But here's the rub: most men cannot train themselves that way. They carry their human nature into every trade. They see a chart not as a record of human behavior, but as a stage for their own hopes and fears. They think it must go up because I bought it, or it must stop falling because I can't afford more losses. The market doesn't know you exist, and it doesn't care. All it knows is the crowd, and the crowd is driven by the same emotions that have ruled men since the beginning of trade. Don't you think it's foolish to bet against something so eternal? What separates the successful trader from the ruined one is not intelligence, but control. Control over himself, control over those very impulses that drive the crowd. If you can stand apart, if you can see the crowd rushing into a stock and remind yourself that greed always overreaches, then you have a chance. If you can see a panic unfolding and remind yourself that fear always overshoots, then you have a chance. That is what makes a trader using the knowledge of human nature as a weapon, instead of being its victim. Remember, the stock market is only a mirror. It shows you the truth about men's emotions magnified by money. When the mirror shows greed, it looks like a bull market. When it shows fear, it looks like a bear market. But the mirror itself never changes. Haven't you noticed that when you study old charts, the patterns look exactly like today's? That's because the men behind them are driven by the same unchanging nature. Technology may speed up the moves, communication may spread the frenzy faster, but the shape is always the same. Wealth comes from respecting this truth. When you build a method based on human nature, it doesn't expire. It doesn't need to be reinvented every decade. It lasts because men don't change. They are as impatient, as hopeful, as fearful, as greedy today as they were when railroads first hit the tape. That's why my principles worked then, and they work now. Not because I was a genius, but because I built them on the foundation of human nature, and that foundation never moves. Most men lose because they think they're playing against the market. They're not. They're playing against themselves, against their own emotions. The market is just the field where the game takes place. If you master yourself, you master the market. If you don't, you're doomed, no matter how much you study. Haven't you seen traders who know every statistic, every report, every piece of news, and still lose? And haven't you seen others who know little more than how to read a chart, but keep winning? The difference isn't information, it's mastery of human nature. So when I say human nature drives the market, I mean it in two ways. First, it drives the crowd, and that crowd creates the repeating patterns we all see on the tape. Second, it drives you, the trader, and unless you learn to control your own nature, you'll be swept away by the crowd's tide. The market doesn't beat you, you beat yourself, by letting fear and greed dictate your moves instead of discipline. And every ruined trader is proof of this law. Every boom and bust follows the same emotional cycle, and if you've studied the tape long enough, you'll see it clearer than daylight. The story starts quietly, always the same way. A new opportunity, a fresh idea, some development that captures the imagination of a few sharp minds. At first, the crowd ignores it. Prices sit still or drift in small ranges. Only the observant are buying, accumulating without noise. Have you ever noticed how the best moves begin when nobody else cares? That's the start of the cycle. Then comes the recognition phase. Word begins to spread. A few stories make their way into the papers. Friends whisper to friends about a promising stock, and the average investor takes a small nibble. Prices rise, and suddenly everyone feels clever for noticing it. Greed is awake, but still shy. People think they are cautious, but they're not, they're already slipping into the cycle. Haven't you seen this moment on the charts? The slow lift, the growing volume, the steady climb. It's the point when confidence begins to replace doubt. Soon after, confidence grows into excitement. Prices rise faster, the headlines get louder, and the public begins to believe the story is bulletproof. It doesn't matter if it's railroads in the 1800s, steel in the early 1900s, radio in the 1920s, dot-coms in the 1990s, or cryptocurrencies in recent years. The story changes, but the emotions never do. The crowd becomes convinced that this is a new era, that the old rules don't apply. Haven't you heard it before? This time is different. Those 4 words have marked every single bubble in history. When the mania sets in, the charts show it too. Prices don't just climb, they leap. Breakouts explode higher, pullbacks are shallow, and even the weakest hands make money. Everyone is a genius in a bull market, because the tide itself is lifting all boats. But what the novice calls genius, the experienced trader calls the dangerous middle of the cycle. Because when the crowd starts to believe prices can't go down, that's exactly when the top is being built. Have you noticed how the tape starts to get wild in those moments? Big gaps, big swings, faster moves, it's the fever of greed. At the peak, confidence becomes arrogance. The last buyers rush in because they fear missing out. The shushin boy, the cab driver, the clerk at the store, they all have tips. They all want in. That's the exact moment when the professionals, the disciplined men, are distributing their stock to the crowd. They are selling into strength, unloading their positions piece by piece, while the latecomers eagerly take the bait. The public thinks they're getting rich, but they're really buying the bags that the professionals no longer want. Doesn't that sound familiar to you? Then comes the turning point. It can be a headline, a rumor, a small shift in supply and demand. Prices hesitate, then dip. At first, the crowd ignores it. They say, it's just a healthy pullback. They buy more, thinking it's a bargain. But the smart trader watches the tape and sees the difference. He sees that rallies are weaker, that sellers are pressing harder, that volume is heavier on down days. The cycle is shifting. Haven't you noticed how the first cracks in a bubble are invisible to the crowd, but obvious to the disciplined eye? When the decline becomes undeniable, fear replaces greed. Prices fall, and instead of buying dips with excitement, the public begins to hold on with hope. It will bounce back, they say. It always has. Hope is the cousin of greed, and it blinds them just the same. They refuse to sell because selling means admitting they were wrong, and so they hold, even as losses grow. That's why bear markets don't start with panic, they start with denial. Haven't you seen how a stock can drift lower for months, while the crowd insists it's only temporary? Eventually denial turns into anxiety. Losses pile up, portfolios shrink, and the mood shifts. What was once a sure bet now looks uncertain. The headlines turn negative. Analysts who were once bullish change their tune. And as anxiety grows, selling pressure increases. Weak hands can't bear the pain any longer, and they begin to unload at any price. The decline accelerates. The same crowd that bought too late at the top now sells too late at the bottom. It always happens this way, because human nature doesn't change. Finally, fear reaches its climax in panic. This is the mirror image of the mania phase. Just as greed once pushed prices far above their real value, fear now drives them far below it. The tape shows wild swings again, but this time downward. Stocks are dumped at any price, fortunes are wiped out, and the newspapers shout about disaster. The public can't take it anymore, so they sell everything, swearing never to touch the market again. And while they're panicking, who's quietly stepping back in? The professionals, the disciplined traders, accumulating at the very prices the crowd is abandoning. Doesn't that complete the cycle in your mind? After panic comes despair, and with despair comes silence. The market stops making headlines. Nobody wants to talk about stocks anymore. The public wants nothing to do with speculation, because their wounds are too fresh. Prices stop falling. Bases form, and slowly, accumulation begins again. The cycle resets, just as it always has. The faces are different, the tickers are different, but the rhythm is the same. Boom to bust, greed to fear, hope to despair, then back to hope again. That is the unchanging heartbeat of speculation. You can open the chart of any great bubble or crash and trace this cycle with your finger. The South Sea bubble in the 1700s, tulips in Holland, railroads, steel, oil, radio, dot-coms, housing, crypto, it doesn't matter which. Every chart is the same. Every emotional cycle follows the same path. And every time the crowd insists that this time is unique, that history has changed, that the old patterns no longer apply. And every time, they are wrong. The trader's job is not to predict the news or invent new theories. His job is to recognize where in the cycle the market stands. Is greed still building, or is fear creeping in? Are prices climbing because of real demand, or because of mania? Is the crowd hopeful, anxious, panicked? Once you can see the cycle for what it is, the tape becomes less mysterious. It's not about magic, it's about human nature, repeating itself as it always has. If you look at it honestly, the cycle is nothing more than a mirror of the emotions you've felt yourself. Haven't you ever felt the rush of buying into a hot stock, convinced it would never come down? Haven't you ever held too long, hoping against hope that your loss would recover? Haven't you ever sworn off trading after a painful defeat, only to come back again later when conditions looked better? That's the same cycle in miniature, playing out inside you just as it plays out in the crowd. The only difference is that the tape records the crowd's emotions, while your account records yours.